Goldman Sachs says buy commodities after issuing dire supply warning.
Right now, the upside risk in this market is exceptionally high. One of the reasons why, is alluded to, the markets are incredibly tight from a physical perspective. Whether you see it on the refining margins or in crude oil itself, the entire complex is extraordinarily tight, reflected in that super backwardation. Obviously, what it means is that this market is incredibly vulnerable to any type of supply or demand disruption, very much like what we saw in European gas and power, let's say late last year. So oil has now teed itself up, to look very similar to what European gas and power looks like. That was what we highlighted this risk back in October of last year. We're at that point right now. And so the question is, can you come up with any supply or reduction in demand as you move into the spring to be able to ease the situation? 2008 was a financial crisis. This is a molecule crisis. We're out of everything. I don't care if it's oil, gas, coal, copper, alloy, you name it, we're out of it. And it's, the backwardation in this market is an indication of just how different this market structure is from 2008. 2008, the curve was going up by the back end, dragging it up. It was in contango at some points in time, which tells you it was paper financial buying on the back end as opposed to outright shortages. This curve is super backwardated, and many of these commodities are super backwardated, which is textbook shortages. In fact, when Keynes created the idea of backwardation in the 1930s, this was what he had in mind, and we have not seen such types of backwardation. I've been doing this 30 years, and I've never seen markets like this. This is textbook shortages.
So Jeff Currie says this is a molecule crisis. We're out of everything. I don't care if it's oil, gas, coal, copper, alloy, you name it, we're out of it. The head of commodities research at Goldman Sachs says. Jeff Currie, the closely followed head of commodities research at Goldman Sachs Group, yes, I know what we all think of him, says he's never seen commodity markets pricing in the shortages they are right now. I've been doing this 30 years and I've never seen markets like this, Currie said in a Bloomberg TV interview. This is a molecule crisis. We're out of everything. As I said before, I don't care if it's oil, gas, coal, copper, alloy, you name it, we're out of it. Futures curves in several markets are trading in super backwardation, a structure that indicates traders are paying bumper premiums for immediate supply. The downward sloping shape in prices generally taken to mean commodities are severely undersupplied. And I'm going to do a video about silver on this shortly, but what we'll do, let's go back and cut to another clip that Jeff Currie did.
Well, our base case is a commodity super cycle that includes, oil, metals, grains, the entire commodity complex. And metals and grains have been the ones that would probably be the more sticky longer term here when we think about the potential for, a multi-year, potential decade type commodity super cycle. So, our outlook in, grains is some modest upside here. Not a lot, at least this year. But if you get, the weather's already bad in Latin America, which just exacerbates the problems that were already created last year. So what I do want to emphasize, inventories of wheat and corn are not as critical as they are in gas and in oil. However, the harvest in Latin America looks to be, disappointing, which means as we move towards the end of the year, that could be, the buffer could be erased.
And Jeff, given the rising prices there and with oil and other commodities, we continue to see those inflationary pressures, and Goldman Sachs is even warning that we might see a growth shock if we do see a sharp monetary tightening coming from central banks. So how do you really combine this with your outlook for the commodity space, given the growth picture out there?
Commodities are a late cycle hedge. In fact, they are the best hedge against, rate hikes, inflationary pressures, because ultimately when we think about when you initially hike the rates, it impacts the valuations of equities and financial markets, but its impact on the real economy is a ways out. And here's an important point. What creates the negative correlation between commodities and financial markets is that commodities depend on the level of demand versus the level of supply. If that growth rate slows and demand still above supply, still see upward pressure on prices. Financial markets depend upon that growth rate. Commodity markets depend on demand being above supply. Even in a declining market at the end of the business cycle, demand's above supply, which still gives you that diversification of commodities going higher as the equities are coming off. So the key point here, commodities are late cycle instruments, and in fact, we advocating putting them in a portfolio right now.
And how do you factor in the fact that, remember last year we had this different picture where Western central banks were actually in easing posture, but now we have them trying to tighten. At the same time, the PBOC going the other way around. So with this policy divergence, how does that really factor into the commodity space?
Well, that's if you look at 2020, China had the foot on the accelerator, and Europe and the U.S. were struggling to come out of the pandemic. So it was the opposite then. Then you had the flip-flop in 2021, and 2022 looks to go the other direction. Commodities are global markets. So they're very much dependent upon what happens, throughout the world, and the demand levels in places like China, in the U.S., in Europe, all matter simultaneously. That's why what we're facing in oil and the rest of them is a scarcity situation. Some consumers going to get rationed out of these markets somewhere in the world. The biggest candidate are emerging markets like India, Brazil, Indonesia, China, U.S. and Europe. You're unlikely to see, a substantial slowdown in growth. I think the biggest risk in China right now on oil is Omicron.
You say commodities make sense in a late cycle, but if we look at a couple of commodities, and I'm thinking lithium, nickel, other products that are essential to EVs, what tailwinds do they bring to the late cycle as well? Is that what you say, but even more so?
If I were to pick, the green metals, and there's 6 green metals: copper, aluminum, nickel, silver, lithium, and cobalt. You picked, nickel and lithium are not our favorites. The ones we would focus on in terms of the green metals would be copper and aluminum. And aluminum, we like to call it the climate change paradox. You need it to solve global warming, but it creates the greatest emissions of all the commodities, which makes it extremely tight right now. Our target on aluminum is 3,500 a ton, and on copper, we're 12,000 a ton. I like to point out, copper is the new oil. Copper is the most strategically important commodity, and it's really king to this story.
Aluminium, probably, forgive my European pronunciation of it, a good way to circle back to Russia. As tensions increase, what does that mean for the price of aluminium?
I think, when you look at Ali, it fell victim to the sanctions over election tampering back in 2018. And by the way, that's an important point here. The Russians have seen those swift sanctions before in 2018, and it had a profound impact on the global aluminum market because it shut everything down. But because they have seen those types of sanctions before, Russia has made the preparations to be able to deal with them in the future. I like to point out they sold $83 billion of treasuries since then, stockpiled their central bank with gold, even greenbacks, to be able to deal with any type of stoppage of the SWIFT. So I think in terms of looking at potential disruptions in aluminium, to use the European term, pretty unlikely right now, just because they've seen it happen in 2018.
So I've been banging on about a commodity boom for, pretty much since I started this channel in 2020. And I did this video, Gold, Silver, and Commodity Boom Ahead, not too long ago, where Art Berman was talking about the oil situation. Now, Art is pretty much my go-to guy when it comes to the oil market, and he's pretty damn good at what he does. So I did this video, $173 trillion commodity boom ahead, talking about the whole, energy transition that our governments and central planners are wanting us to do, and how Paul Tudor Jones, billionaire Paul Tudor Jones, is telling everybody that they need to get commodities, that commodity trade is the place to be. And I've argued that in this video as well. And I think this was an older video I did where, once again, Paul Tudor Jones says buy gold, silver, and commodities. He's been screaming it for at least the last 12 months now. Now, I also did this video. I don't think I've actually had too many views on this one, but a $2 million profit on this commodity trade. And I shared in this video how I made $2 million on the energy trade, in particular coal, in particular one particular coal stock. And, Chris McIntosh talks a lot about commodities, the supply and demand. He was talking about this commodity play long before Jeff Currie has now jumped on the bandwagon. And, you may not like his politics or his view. You may not like my politics and my views and whatever. But at the end of the day, this is economics, and this is investment. This is investing capital, allocating capital, and wanting to multiply that capital. And Chris is one of the best in the business as far as I'm concerned. Now, my last video I did in 2021, I called it Inflation 15% Silver Boom in 2022. It was basically my predictions for 2022 and what we're going to see, or what I believe we're going to see. And when I said inflation 15%, I'm talking about CPI there. We all know the Austrian and the original definition of inflation. So, don't yell at me in the comments. I know what inflation is. I've done a video on it using the Austrian definition, or the original definition of inflation. Prices is just a result measured against the demand for that extra currency that's being created. So we know inflation is the expansion of the currency supply. And I talked about, my projections for 2022. And, well, what was one of them? Well, I've shared this in a couple of videos. I've done my silver and gold projections. But have a look in red. I talked about commodities. I am still bullish the commodity play. Agriculture, copper, nickel, silver, gold, oil, coal, gas. Yeah, we're moving across. We're having this energy transition. But you're going to need a lot of oil, coal, gas to do this. And then even when we do, we're not going to have the supply. We're not going to have the energy needed to meet, just minimum demands, let alone a growing demand of energy. And energy is the bedrock foundation of any modern growing economy. So I think we're going to have a big energy problem in the decade ahead, and probably beyond, until we realize that we've all been duped, that we've been fooled, and we make a different decision. But we'll wait and see what happens there. But as I said, I'll do a video on the whole silver position, the silver supply versus demand, because that's actually getting quite interesting. And for some of you, you may not have heard of someone I'm going to introduce in this video, but I'm going to introduce him and recommend that you guys follow him, especially those of you who are silver investors like myself. But obviously, copper is something I am extremely bullish on. I'm almost as bullish on copper as I am gold and silver for the monetary crisis that we're going to face. I love copper. I absolutely love it. And I have been investing heavily in the last 12 months in that, in some stocks and exploration stocks that are in that copper space. But then, lithium, well, lithium's had a great run. It's got that story, because of the EVs and whatnot. But you've got, and by the way, I've actually got a gold explorer that's actually jumped into that lithium space, which is quite exciting. Anyway, I might talk about that in another video. But cobalt, uranium, I know not many people like uranium, but I think at some point, and this is probably a more longer play, uranium, probably not so much 2022, but a longer play, is we're going to realize with our energy crisis that going green or carbon, trying to reduce the CO2 emissions and whatnot, we just won't be able to function as an economy, and we're going to have baseload power. And, if we're still up in arms about CO2 at that point, then we're going to have to turn to uranium. We're going to have to turn to nuclear power. There's no two ways about it in my mind. And so I think there's a great play set up for uranium, but probably more of a longer term play, because I think we need to experience some pain in the economy through an energy crisis before the truth comes out and before we move across to that. But yeah, zinc, rare earths. Rare earths is something I've also got some exposure to from a military point of view, as well as many other things. I think there's going to be huge demand for that rare earths, and then rhodium and platinum. I'm also bullish on as well for different reasons. But yeah, guys, I've been talking about commodities and a commodity super cycle. I've been talking about inflation and CPI and a debasement of the currency. And I don't care if the stock market crashes 50% or more. We are still going to see a debasement of currency. We are still going to see CPI. Like I've argued many times, we saw in 70, 73, 74, the market fall 50% in nominal terms while CPI was at 12.5%. And I can't remember off the top of my head what interest rates were, but they were fairly highish as well. So I see that playing out again. And with the transition over to, transitioning our energy infrastructure, that's going to require a lot of minerals and metals and commodities at the same time that we've basically stopped drilling for them. We've stopped exploring, or we've severely reduced the exploration for them. And so it really does line up to be an asymmetric trade in my view. And, probably the two metals I'm most bullish on from an asymmetric play is copper and silver. Copper and silver. And yeah, I'll just stick with those two, copper and silver. And there's a few others I'm bullish on, but maybe not so much in that asymmetric play, more of a longer term growth play. But anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it, guys. Take care, everyone, and I'll see you all again on another episode of Finance Uncut.